Well, hello and welcome to this Moneycontrol live feed. You're watching Morning Trade with me, Nandita Khemka. Well, over the next 30 minutes, we'll be talking about the cues for trade, the stocks that will be in focus today. Of course, FMCG earnings will be in focus. Auto earnings will also be in focus. So we will be decoding as to what to expect from some of these companies. And we'll also be getting all your stock-related queries answered by our technical expert on the show. So if you have any queries, send them in to us on our YouTube feed and we will have them addressed by our technical expert on the show. But before we do all that, let's take a look at the top headlines at this hour. Wall Street ends mixed with the Nasdaq ending lower ahead of big earnings from Google parent Alphabet and Microsoft later today. Asian markets trade largely lower while the SGX Nifty is signaling a higher start for the Indian markets. Three Nifty firms will be reporting earnings today. Weak exports may hurt Bajaj Auto's Q4 ride, but double-digit profit and revenue growth seen for Tata Consumer, while Nestle's margin is likely to take a hit from higher dairy costs. India's fourth largest pharma player, Mankind Pharma's 4,300 crore rupee IPO will open for subscription today. Promoters will be selling about 2.5% stake, while PE firms Cairnhill and Chriscap will offload 5% and 2.5% respectively. Also in the spotlight today, Ipca Labs as it buys stake in Unicam Labs, and Persistent Systems reports better than expected earnings for the fourth quarter. So we will be getting you more on these stocks later on the show. Before we shift focus to FMCG earnings, let's bring on board our technical expert for today, Sacchitanand Uttekar of Tradebulls Securities, joining us this morning. Good morning, Sacchitanand. Good to have you on the show. Well, yesterday we saw a late-hour surge on the Nifty. In fact, we managed to shut shop around that 17,750 mark. Do you expect the momentum to continue in today's session?
Good morning, Nandita. Yes, we did see Nifty, scaling above the 5-day exponential moving average, which is placed at around 17,670. Now, this particular movement happened after 5 days of a lower top, low bottom sequence, wherein the Nifty was finding itself difficult to sustain and close above this particular average. But if you look at the overall structure on the weekly scale, the way data has been presented right now, we have a clear-cut evidence of an engulfing bearish formation, and hence I think this particular pullback may not be sustainable. So probably the headroom on the higher side remains limited. We are not expecting Nifty to scale higher above the 17,860 mark in the coming sessions itself, and probably 17,800 may act as a very crucial resistance for the day. On the lower side, what we're expecting today is that Nifty probably may slip again below that 17,670 mark, and probably we may see some kind of a sideways consolidation in the second half. So I think the broader range for the Nifty is still holding intact. We are not expecting any movement outside 17,800 on the higher side to 17,500, 550 on the lower side. Probably this particular week may be more consolidative for the markets. But when it comes to Bank Nifty, I think the trend is very strong. It has been forming a higher top, higher bottom sequence since the beginning of this particular series. It has never closed below its 5-day exponential moving average till date. And probably if you look at the entire structure, we still have some evidence and scope that probably this particular momentum may continue towards 43,000, 43,500 eventually. So I think building longs in Bank Nifty could be a prudent idea. Even right now, we still have substantial evidence. On the higher side, I think that 43,000 mark would be a very crucial unwinding resistance.
Right.
Probably once that particular resistance is closed, we may see a very good move towards 43,560 during this particular week itself.
Right.
So I think building longs in Bank Nifty would be prudent with a stop loss somewhere close to 48,340. But when it comes to Nifty, I think it is still more on the sideways to negative zone.
Right.
So any pullbacks towards 17,800 should be utilized to create short positions. The stop loss should be placed at around 17,860.
All right, those are the levels to watch out for on the Nifty and the Bank Nifty. Hold that thought. We'll come back to you and discuss specific stocks. But before that, let's shift focus to FMCG earnings. In fact, today we have Tata Consumer and Nestle reporting earnings later in the day. Well, who better than my colleague Mangalam Maloo to put into perspective what to expect from some of these FMCG companies. Mangalam, good to have you in the studios. I want to ask you, yesterday we saw Tata Consumer jump somewhere around 5% in trade, among the top Nifty gainers. Blockbuster kind of expectations this time around from Tata Consumer?
Not particularly blockbuster, but definitely a good set is expected, and that's the stock price move telling you that. Because before that as well, we had seen the stock correct about 18 to 20% from its 52-week high. So maybe some people believe that the worst is behind the company with regards to tea prices, etc. And going forward, a lot of their positive triggers are in place as well. So, just to give you a quick primer on what the street is expecting from Tata Consumer this time round, we're looking at an 11% growth in the company's revenue, so a little over 3,500 crores. The EBITDA grows just short of the revenue growth at around 6%. That means the margins compress by about 40 to 50 basis points. And that is extremely important to watch out for, mainly because, one, the downward pressure on margins could come from their international business, but that's gradually improving. So is that likely to improve further? And the company says that the worst of those margins behind them or not is the big question we'll get an answer to. And if there is an outperformance there, then the runway of growth is immense for Tata Consumer. Why do I say that? Because the India overall business, while it's likely to grow 10 to 12%, the foods business in India is likely to grow by 26%. They have a strong foray into foods. They're entering newer categories, something like even dry fruits, etc. And India tea business likely to grow by 1 to 2%, mainly because tea prices from last year have seen a bit of a dip. In the international business, just about 2 to 3% growth expected. Margins are something I'll be watching out for there.
Right, so margins for the international business is something that we will be watching out for from the commentary. Mangalam, let's also talk about Nestle. I was just reading through some expectations. It's the high dairy costs that may weigh on margins, given the fact that milk prices have surged somewhere around 30 to 40% on a Y-by basis, right? So what do you expect from Nestle? And any color they may provide on the fact that they have emerged as frontrunners to buy Ching's? Anything to look forward to on that front?
Well, I'm not sure if they will, say whether they've emerged as frontrunners or not. If they've gone ahead and bought it, they will announce it in this number, in these numbers itself. But that's something which is beyond the realm of us expecting something like this.
Yeah.
But the important part to watch out for Nestle this time around, like you said, was dairy prices. And so not just, for Nestle, for everyone who uses dairy as a key input, we'll be watching out for that. And in the listed FMCG space, Nestle, of course, has the highest exposure to dairy because a large part of their revenues does come in from dairy-related products itself. And you and I know, 30 to 40% is a number which analysts will write. But the pinch that consumers feel when milk prices, paneer prices, curd prices increase, is a lot more than what the number would suggest. And that would have an impact on demand more than margin. So that is something we'll be watching out for. The other thing I'll be watching out for in Nestle, in particular for Nestle, is that the 5 rupee Maggi has now become 7 rupees. I don't know whether you noticed that.
I haven't really.
Exactly. So go out to the market. 7 rupee Maggi, while Yippee has kept their product price point at just 5 rupees itself. So will they lose market share to Yippee at the 5 rupee price point structure or not is the other thing I'll be watching out for. And the third thing is that Nestle has, a couple of quarters ago bought Purina, which was the pet care business, and pet care is growing extremely well. So any commentary regards that is something we'll, tune into. So that's the non-number part of it. As far as numbers are concerned, 12% revenue growth, just shy of 4,500 crores on the top line. We're expecting the EBITDA margins to compress by about 40 to 50 basis points because while milk prices have increased, there are a lot of other prices which have decreased. So there will be a bit of an offsetting effect on the margins from there. And the net profit for Nestle likely to grow by about 13.5%.
Right, Mangalam, that was about Nestle and Tata Consumer. Since you are here, I would just want to, throw in a question on the entire FMCG pack per se. Because, rural demand, in fact, recovery has been a little patchy. So for the likes of HUL, Marico, Dabur, given the fact that El Nino risks are there, right, how would that impact their numbers? Because over the next coming weeks, we will have numbers from some of these companies as well, right?
Yes, in fact, HUL will report its numbers day after tomorrow itself. So we'll be watching out for that as well. 4 things to watch out for in the consumption space this time around in this quarter. The first one is return of volume-led growth. Now, a consumer company grows by both revenue as well. In revenue, it grows by price or by volume. Price growth is basically, the same amount of product which has been sold, but a 5 rupee product becomes a 7 rupee product. So the revenue growth of 2 rupees is led by prices. Or volume growth is something where the same product is sold more. So instead of 1 Maggi, people are buying 2 Maggis. So that's 100% volume growth that has happened. So this time around, because prices have begun to moderate, people will start buying more. Volume growth will come by. So that is one major trend I'll be watching out for. For rural demand, gradual improvement is something I'll be seeing, mainly because rural demand weakness, according to me and a lot of the companies that we've been speaking to, peaked in the last quarter of the last calendar year, which is the third quarter of this financial year. Now, rural demand will start improving gradually. So to that extent, management commentary will be extremely important, mainly because the worst of inflation, everyone believes, is behind everyone.
us.
So once that happens, people start buying more. And that is reflective in the higher volume growth expectations as well. Urban still continues to outperform, so that's a big positive. Secondly, there's been further easing in raw material inflation. Now the question is, if companies are using this raw material savings to go ahead and spur demand, how do they spur demand? They would spend that more on advertising, or they will start giving people more product for the same price. So these offers, promotions, etc. That may not immediately impact margin improvement, but that may impact their sales improvement, because you are spending more on advertising, you're spending more on demand generation. So those are a couple of major factors that I'll be watching out for. And apart from the reported numbers, of course, like you said, commentary on demand will be crucial, because they are talking about El Nino, but then again, you have the IMD and SkyMet, both of them saying that rains would be 94 to 96% of long period average, which is as close to normal as it gets. So, you know, for most FMCG companies, in the fourth quarter and the first quarter of any financial year, they usually talk about post-monsoon demand. They talk about the second half. So I'm willing to bet my last dollar on, you know, companies saying this time around that we will watch out for post-monsoon festive season recovery, because it's the second half of the year which has 60% of the consumption.
Right. Well, I'll also bet my dollar on that now that you've told me that. Mangalam, thanks a lot for taking out time and joining us and putting things into perspective. With that, let's shift gears and go back to Sacchitanand and talk about IndusInd Bank. It reported a fairly good set of numbers yesterday. A lot of brokerages have also retained their buy rating on the stock, with target price ranging from 1,500 to 1,600 rupees a share. How would you play this stock now, given the fact that earnings have been pretty decent and, you know, as expected, the MD and CEO has also gotten an extension for 2 years. So what would you look out for on the charts of IndusInd now?
Anand, I think the stock may just consolidate from here on. I think 1160 on the higher side remains as a crucial resistance. But we have seen a good amount of evidence that 1040, 1020, you know, that particular zone has acted as a very good support. So probably we may see, you know, it lingering in this particular broader range itself. We are not expecting any major move to unfold here. If you look at the weekly sequence, it is still in that low top, low bottom, formation. And the pullback, I think, seems quite mature. So I think we are not expecting this particular move to extend above that 1160 mark. So probably the upside looks very much capped. But on the lower side, probably, you know, it may just drift lower towards that 1040 level. So net, I think it looks more consolidative than bullish from here on.
Right, more consolidating than bullish. That's the call on IndusInd Bank. Let's talk about Bajaj Auto as well. Numbers are slated to come out today. For me, that's the stock of the day. It's at a fresh 52-week high, the stock, and it's up 20% on a YTD basis. If you look at expectations, you know, revenues are seen up somewhere around 5%. EBITDA may rise 15% on a YY basis, but profit may slip somewhere around 5%, compared to last year. So expectations are largely mixed bag when it comes to Bajaj Auto. Overall volumes were down 13% or so on a YY basis, and two-wheeler export volumes, declined 38% on a YY basis. So basically, it's the export factor that will weigh in on Bajaj Auto's Q4 performance. Stock has done fairly well for itself this year. So how should one position themselves when it comes to Bajaj Auto?
Well, the price performance has been excellent even during this particular series. The base from where it lifted off 3,800. Post that we have really not seen any signs of exhaustion. We did see a hurdle, a minor hurdle at 4,000, 4,100, but that particular level was also decisively breached. So I think the major structure still remains fairly bullish, even if we see, a profit booking because of this particular event, that profit booking may be absorbed somewhere close to 4100. So I think the major trend still remains positive. Any declines during this particular phase could be utilized to create fresh long positions. I would not like to chase this particular momentum, because if you look at the daily RSI, it is exhibiting a negative divergence when it comes to daily charts, and the stock has already spent quite a lot of time scaling above its 5-day exponential moving average. So probably in case if someone is already holding on to this particular position on the leverage side, the ideal stop loss should be placed at around 42.40 from here on. And in case that particular level is breached, then leverage longs should be avoided. We may see a good healthy correction coming back in this particular counter, which can be utilized to create or re-enter into the position. But as of now, it's better to avoid a momentum, chasing momentum, and wait for a pullback to create fresh long positions when it comes to portfolios.
Right, so we have some queries coming in on Bajaj Auto on our feed. Hope this answers your queries. Let's also shift gears and address a query on Adani Group shares. We haven't really discussed this group of shares in some time now, I feel. So I thought I'll just take up a query on that. Prabhu has written in and he wants to know your thoughts on Adani Group stocks now. If you look at Adani Ports, I think some of these stocks actually have come off the kind of lows that we saw post the January report. So how should one go about playing these counters? Worst over for some of these stocks now?
Ideally looks like, in fact, if you look at Adani Ports, this particular stock has been on our radar since last few weeks, but the price expansion has still not happened in that particular way. Even if we look at the clusters, I think 860, 680 remains a critical resistance from a momentum perspective. Once we see it confidently trending above it, probably the trajectory on the higher side remains open right up to 720. So I think when it comes to Adani Ports, we are quite comfortable, chasing longs. The support which it has formed at around 650, I think that particular support will hold on for this particular expiry as well. When it comes to Adani Enterprises, the price action has still not been that confident. Though we have already seen a major base getting reinstated at around 1200, which we don't see, getting breached anytime soon. So even if it falls down, I think 1600, 1640 is an ideal support level wherein the stock can be considered in one's portfolio. But major part of momentum may only unfold once the stock starts, comfortably trending about that 2000 mark.
Right, so that's the call on Adani Group of stocks. We are getting a query on CESC. Vinod Kumar has written in. How would you play some of these power stocks now, Sacchitanand, likes of CESC, even Tata Power, for that matter?
When it comes to CESC, I think the trend is still weak. We would not, be in a position to create any fresh long positions. Even Tata Power, it has been scaling lower, but the movement has been quite gradual. It is trying to find some support near that 190, 185 kind of a mark. We have already seen a good, healthy consolidation in the last couple of weeks. But if you look at the, the placement of its trend strength indicators, they are still not comfortable. They are still indicating that probably, the stock is still in that neutral to negative zone. So I think it's better to avoid, chasing any long positions when it comes to power stock. When it comes to Tata Power per se, I think the resistance at around 205 would be crucial. Once we have a weekly close above this particular level, then probably, we may see some signs of change in trend. But as of now, it is still drifting lower. In case if that particular level of 190 is breached, we may see one more round of selling towards 185.
Right, so that's the call on the power stocks. But let's also take up a query on Kirloskar Oil Engine. Rajat Kumar has written in and he holds 46 units at the rate of 393 rupees a share. If you look at the counter, it's like literally flirting with its 52-week highs of 419 or thereabouts, trading at 416 right now. Should he hold on or should he look at booking profits?
It's better to hold on to the counter. There are no signs of any distortion here. despite of the fact that the stock is trending to near its 52-week high zone, almost at the all-time high zone. If you look at the monthly RSI, there are still no signs of exhaustion or any divergence here. It is still comfortably trending above that 77 mark. So I think it's better to hold on to this particular counter. The trailing stop loss, which I would recommend, is somewhere close to around 372 on a weekly closing basis. So until unless we don't see it, trending lower below this, the trend still remains healthy. On the higher side, the way we saw a breakout in the month of March, somewhere close to 360 zone. The pattern itself is exhibiting a target of around 560, which could be seen in a year or so. So probably one should hold on to this particular counter with a trailing stop loss mechanism.
Right. Let's also talk about Ipca Labs and Unicam. These two companies are in focus given the fact that Ipca Labs will be acquiring promoters 33.38% stake for somewhere around 1,000 crores or so, and it will be buying up to 26% in Unicam via open offer at 440 rupees a piece. We also have a query coming in from Pooja Shah, and she wants to know whether you should buy Unicam at current levels. So how would you look at these two counters in today's session?
If you look at both the chart structures, Unicam still looks better. In fact, it is forming a higher base sequence. The base is well established at around 300, and we've already seen a very strong rally of late from that particular base itself. So in case if we see any declines towards say 340, 350 mark, I think it will be a healthy zone wherein the stock can be accumulated. As of now, I think the structure is quite evident. The base is very strong at around 300. So any pullback towards 350, I think that could be utilized to create some long positions here. Eventually, we may see this particular trend getting continued, and we may see this particular stock scaling above that 500, 520 mark.
Right. I also want to talk to you about Persistent Systems. It reported its fourth quarter earnings. It's much above estimates when it comes to the CC revenue guidance, given the fact that the large caps have largely disappointed, barring HCL Tech. But some of these mid-cap companies have fared extremely well compared to the large cap peers. You had the likes of, Persistent, Cyient and Mastech. All these companies have reported a very good set of numbers, and that has also been reflecting in the stock prices. So for Persistent in particular, upside coming in today's session?
We are tracking this counter, and I think the base at around 4350, which was established a few days back, I think that particular base should hold on. And on the higher side, I wouldn't be surprised in case if we see a swing towards 4800 eventually. For the day, I think the immediate hurdle at around 4500 would be crucial. But the kind of data that we have been observing, probably we may see a very firm short covering rally which may unfold once this particular level is reached, and we may see an eventual swing towards 4800. So I think it will be a good idea to retain your longs. The stop loss should be placed at around 4340 from here on, and probably the stock should be reviewed somewhere close to around 4800.
Right. Sacchitanand, lots of queries coming in on the pharma space. We have queries on Divi's Labs, Laurus Labs, Cipla, Sun Pharma, of course, on the back of the negative news coming in with respect to regulatory issues. We saw some of these counters among the top losers on the Nifty yesterday. So how should one position themselves in pharma stocks now?
I think the entire space, it is still not linear at one and we have something like Divi's, which was outperforming and has started displaying signs of distribution. On the other side, we have Cipla, which has clearly given us some evidence that the support at around 900 looks very fragile. So probably one should be a level-based trader. The entire pack is still not linear right now when it comes to a sectoral movement. So I think the one stock that we are confident of on the short side is Cipla. We've already seen a very good pullback here. On the 60-minute scale, there is a broadening formation in place. The base of this particular formation is around 900. So probably once we see a breakdown below this particular level, it will be a good chance to create some fresh short positions. The pattern itself is exhibiting a target somewhere close to 885. So once the breakdown is exhibited, once it is confirmed at around 900, the stop loss should be placed at around 906, and some short positions can be considered in.
Right. I just want to squeeze in one last query. I think our viewers are getting a little angry that we don't answer their queries. So I want to take up this particular query on AU Small from Ishu Singh, and what your thoughts are on the charts, given the fact that over the last few 5 trading sessions, it has lost somewhere around 3%, but it's steadily moving towards its 52-week high of 712. So what would you advise investors to do with this one?
From a long-term perspective, definitely this is a good stock to accumulate. If you look at the last 1.5 year of data, the stock has been comfortably trending within this particular band of 550 on the lower side and 600, 650 on the higher side. There are still no, signs of any distortion or exhaustion. Any pullbacks within this particular band should be utilized to create or add more long positions here. The stop losses are very clear. Unless we don't see this particular base of around 550 getting reached, we may not see any distribution. In fact, if the breakout takes place above 700, this particular rally may quickly, unfold towards 900, 940 levels. So I think it's better to hold on to this particular counter. Any declines on the lower side towards 640, 620 kind of zone should be utilized to create long positions. The stop loss should be placed at around 550 on a weekly closing basis, and the positional target of around 970, 960 is quite evident when it comes to weekly and monthly scale.
Well, Ishu Singh, I hope this answers your query. But with that, we are completely timed out on this edition of the show. So before I let you go, do leave us with some stock recommendations for our viewers this morning.
Nanita, 2 stock ideas, both on the long side. First one is Canfin Homes, which we've also recommended to our clients. Now, if you look at the position structure, the stock has already given a breakout from a bullish flag formation. If you look at the weekly RSI, it is comfortably trending above that 50 mark. So we are expecting this particular, momentum to continue towards 610. So that is the positional target that we have recommended. The stop loss should be placed at around 570, and we are recommending further longs when it comes to Canfin Homes. The other stock which has been on our radar is HPCL. Now, if you look at the weekly and the monthly structure, there is a clear-cut contracting triangle formation. The breakout level for this particular formation is placed at around 250. So from a trading perspective, we are expecting an initial movement towards 251 during the day. So hence we are recommending trading longs with a stop loss at around 240. But eventually we also see this particular rally getting continued towards 258 in a week or so. So HPCL would be on the long side along with Canfin Homes.
Canfin Homes and HPCL on the long side. With that, Sacchitanand, thanks a lot for taking out time and answering all our stock-related queries as well as our viewer queries this morning. Well, with that, we are completely timed out on this edition of Morning Trade. But don't go anywhere. Stay tuned, because coming up next is Opening Bell.